Hello and welcome to the Vancouver Resource Investment Conference channel. My name is Jesse Day. We're counting down to the next VRIC January 21st and 22nd. There will be a link in the description below where you can get tickets. But for now, we're bringing the VRIC to you with our pre-VRIC summit. Very excited about this event. And today I'm joined by Jeff Clark from the Gold Advisor and Brent Cook from Exploration Insights to talk gold and silver mining stocks. Gentlemen, it's great to have you on the show.
Thanks for having me, Jesse. It's great to be here, and I'm definitely looking forward to VRIC in January.
Yeah, thanks for the invitation.
Happy to have both of you on, and I'd like to get your current thoughts on the state of gold and silver miners and the metal itself. And let's start with gold. I've spoken with many people who think the miners, and particularly the juniors, are extraordinarily undervalued compared to the price of gold itself. Do you agree with that? And what are both the headwinds and tailwinds you currently see facing the gold sector? And Jeff, I'll start with you on this one.
Yeah, sure. It's a great question. I think it's obvious the miners are deeply undervalued, and I'll mention that in a second. But first, I wanted to tell you, if I could look at my notes here, gold ended 2022 at 1813 an ounce. So as of just a couple hours ago, when we started recording here, it's up 7.5% year to date. A lot of people may not realize that, but gold is up 7.5% as of today. Meanwhile, GDX is down 1.3%, and I'll point out the miners are also down today while gold is up, so that's telling. And GDXJ is down 6.2%. So gold is up on the year, the miners are down on the year. There's an interesting stat from Crescat Capital from Tavi Costa. The venture index will have to rise 475% to match its 2007 high. So that shows you how undervalued the miners are. Gold is staying flat. The miners are way down, especially the juniors. We're talking mostly about the juniors. That's where most of the juniors live on the venture index. And also, we just saw in September the lowest monthly volume on the venture index in 10 years. So that really shows sentiment, just how poor sentiment is. And I think that's really the headwind here is sentiment. We just have very poor sentiment in the industry. Even among some miners and newsletter writers, there is some poor sentiment. So that really has to shift before we're going to see anything really substantial, in terms of the juniors. But the catch up, my point of all this is the catch up in that could be quite dramatic if they're that undervalued just at gold where it is. What happens if gold moves higher? The catch up could be quite dramatic. And of course, these things overshoot. We've overshot to the downside. In my opinion, we'll probably overshoot to the upside, which means we're going to see, frankly, some easy doubles and triples, some 5-baggers, and we'll see a good handful of 10-baggers as well. And I guess you'll ask me later about silver, but silver has the same thing, even just more dramatic. But
Yeah, we'll touch on silver in a moment, but first, Brent, I'd like to get your thoughts on the current valuations of the gold miners, including the junior space, and headwinds and tailwinds that you currently see facing the sector.
Well, I agree. Jeff pretty well covered the macro environment and what's happening in the big scale. I think company specific, though, there are still a lot of companies that, in my opinion, are overvalued. And then there's a number that are way undervalued, too. I think the biggest undervaluation I'm seeing right now is in companies that have actual legitimate economic resources and are in the resource definition to development stage. And those offer real big potential going forward, I think, given the gold price is doing pretty well and probably set to do pretty well next year. Probably the major headwind, in addition to sentiment, which sucks, is that the oil price is going up, and that's going to really affect the economics of large scale open pit deposits, that sort of thing. So I think I'm going to focus more and more on high grade underground deposits in the right jurisdiction and that sort of thing. Because and the other headwinds, of course, are permitting issues, social issues, all that sort of thing that's happening, almost everywhere. So those are the headwinds.
Yeah, very good point about energy input costs there. Something not a lot of investors consider. So let's switch to silver now. And Brent, I'll start with you on this one. Same question for silver. Obviously, there's not nearly as many pure play silver miners out there as there are gold. What are your thoughts on what you see out there in the silver mining landscape and headwinds and tailwinds for the metal itself?
Well, the short answer is essentially what we just talked about. Silver and gold are very similar, the exception being that 70% of silver comes from base metal mines. So it's very difficult to find a silver dominant deposit and company, but I think they'll do quite well also moving forward. I'm not what you call a big silver bug. To me, all metals it's all about margin and demand. And so that's kind of where I focus. And there are a few screaming deals out there on silver as well. I think one I'll mention later on.
Great. And Jeff, your thoughts on the silver mining sector at present?
Well, I wrote some notes again this morning before our interview, and silver ended the year, ended 2022 at $23.94. So as of a couple hours ago, it's down 4.5% year to date. SIL, though, the mining ETF, silver mining ETF, is down 13%. And SILJ, the junior mining index, is down 17.8% year to date. So both of those are obviously are down further than the silver price is. So that speaks to opportunity, of course. I think my point would be the catch up in the primary silver companies, whether they're producers or explorers, could be quite dramatic. We historically know that silver outpaces gold in bull markets. It tends to start slower. Gold leads, silver follows. But the catch up in terms of percentage ends up being greater with silver than it does for gold in every single case that we've measured since the 1970s. So the catch up in the miners would be equally as dramatic. So there could be quite the opportunity in silver companies, and especially the juniors right now, because of the potential catch up there. So I think the sediment is still the main thing, and I'd probably say that sediment is actually worse in silver than it is in gold. It's just completely ignored. Lots of selling, lots of dumping of shares. So that really speaks to opportunity. I think the last point I would make with silver is that investment demand really controls this. So you have lots of uses, lots of demand for silver in different areas: industrial, jewelry, silverware, religious objects. All those things are pretty stable. They tend to rise over time. The one variable that fluctuates the most is investment demand. And so investment demand really controls the silver price. We have strong physical demand in the US, Europe, Australia. What we don't have is strong investment demand in funds, where hedge funds and institutional investors go, like in the ETFs, the ETPs, and that is still down and still trending down. That has to reverse for the silver price is really going to take off, including the miners.
Completely agree with you on sentiment there. Whenever I post videos on silver, the amount of negative comments is pretty overwhelming. So perhaps an opportunity there. Let's shift to what the main factors are that you look at when evaluating companies in the junior mining space, along with any red flags that make you think twice before making an investment decision. And Jeff, we'll go to you first on this one.
Yeah, sure. If I'm unfamiliar with a stock, and this really hints at my personal process, if I am not familiar with a stock or have not heard of a project or something and someone asks me about it, the first thing I ask is, okay, where is it and who's behind it? It's got to be a pro mining jurisdiction, and it's got to have someone behind it that has not just experience in the industry, but successful experience in the industry. That's really key for me. So I'm looking at those two things first, and I don't look at the property if those two things don't check out. Yes, I will probably miss some, but Brent can clean those up. But I'm playing at low risk. And so I'm looking at those two things first. We're already taking a lot of risk by being in the junior sector, right? So I'm trying to, compound that risk or reduce that risk down to some really key attributes that I look for first. So it's that. And then in terms of the project itself, if it meets those two things that give me a hint would be if it's low grade. Especially in the current environment, I really agree with Brent on that. You really need to look at high grade things right now. At least margin is the important thing. If it's got refractory ore, if it's an inexperienced geologist, a CEO that's too promotional, those things really turn me off. So, but when it comes to the juniors, my main thing I'm looking for first in terms of the project is, if you remember the game Battleship, the board game where you played the game Battleship and you sunk my battleship. So if you had hits around where you identified the ship before, you can win. Same thing here. You want to look for gold, you want to look for silver where gold and silver have been found before. So I really focus primarily on brownfields projects.
And Brent, same question for you. What are the things you look for and the red flags that make you hesitate when evaluating a junior mining company?
Well, I think first off, I always look at the market cap, and then from there, try and justify that with the data that's available. And then cash, of course. Do they have the cash to move this forward to a point where it, in theory, will increase the stock price? Then is the prize worth the risk? Too many companies I see out there are looking for deposits that even if they're successful, it doesn't justify my risk in investing in it. And that's I think that's key, is what is the actual target they're after? What does it look like as it progresses? And do they results meet expectations, be it a high grade vein or porphyry copper, that sort of thing. Disclosure. They're on the website and in the news releases, do they provide enough data to make a informed assessment? Cross sections, plan maps, detailed assay logs, that sort of thing. And in my view, even if the majority of people listening to this show aren't technically geologists and engineers, just seeing that data presented you tells you at least the company is giving you the data, and that's really important. Of course, jurisdiction, and that comes down to the local, not just the country per se, but what is the local jurisdiction like? Like I can give you two deposits in Arizona. One's going to be permitted really easy, other may never be permitted. So it comes down to actual details and stuff like that. That's all I can think of offhand.
I've been a commodity investor for over 15 years, and I'm the host of one of the world's largest commodity investment conferences. I teach a 10-chapter course on commodity investing for beginners. No complex strategies, just actionable information. Our comprehensive course breaks down the complexities so you can make informed decisions and gain financial freedom. I'm Jay Martin, and this is the Commodity University.
Well, great points from both of you. And also, as part of due diligence, it's obviously great to talk with management, and with companies in the junior mining space. CEOs, management tend to be fairly accessible for the most part to retail investors. So, what do you think are the key questions your average investor out there should be asking management as part of their due diligence? And Brent, we'll go to you first on this one.
Well, sort of the same question. What's the target? How do you know you're succeeding or not succeeding? As Rick Roll always says, what's the unanswered question and how are you going to answer it? That's really the basic point. And then how are you going to, since they're always needing to fund, raise money, how are you going to succeed in such a way that they're raising is at a higher share price? And how do they know when to quit? I mean, too many guys don't know when to quit. And they just keep going and going. And you can see companies that have been around for 10, 15 years, share price has gone nothing but down, market cap might have stayed stable, and they're still drilling the same piss poor project. That gets boring after a while. Yeah, so that's, I guess, what I'd be asking. I'm not sure what the rest of the question was, but that's what you want to know is what's the target?
Yeah.
How do you know you're reaching it? How do you know when to quit? How are you going to fund it going forward at a higher price?
How do you know when to quit? I haven't heard that one before, but it is such a good question. Jeff, what about yourself?
So there are two key questions that I encourage people in my book to ask right up front, and that is, and these are things you can do on your own right from the get-go. When you find a company and you identify who the CEO is, you want to find out how did that CEO's prior companies perform under their tenure. I mean, that's the bottom line. How did the stocks do when they were in charge? Did they create shareholder value? And you may not punish them because of a poor market, but did they advance their projects in meaningful ways? Did they have the cash to do so and the catalyst to push them forward? But you can look at that, go back and just examine their prior companies and what did the stocks do when they were in charge? And the second thing is, how much of your own money, Mr. CEO or Mrs. CEO, have you put into your stock? I met a CEO at a conference last year, and I'll leave them nameless, but I asked him that question. I was getting familiar with the company and the project. And I said, well, how much of your own money have you put into this? And he goes, zero. I'm like, well, why do you expect me to put my cash, my investment dollars into that if you're not putting any into your own? And this was not a young guy like Jesse Day. This was a middle-aged gentleman who's been around the industry for a while, and he had put literally zero of his own dollars into the stock. I walked away from that conversation and crossed off my list. So that's a requirement. Those are things you could find out very easily, even in the public format, before you even talk to them. But kind of building on what Brent was saying, that's a great point. You need to be aware of why you're investing in that stock. What's the investment thesis for you investing, especially in Explorer? Is it a drill program or what? And so what's your exit strategy? When will you know you're successful? When will you know they're not successful and it's time to exit? So knowing that ahead of time, I think, is very important.
And what do you think the best way for somebody who's new to the junior mining and maybe the mining space in general is in terms of getting the required education to start being able to evaluate individual equities? Because this is obviously quite a serious undertaking. I think for the vast majority of investors out there, they don't have the time nor the expertise. They should probably just buy an ETF or royalty and streaming company. How do you think the best way to get educated is? Should people be learning some basic geology? Should they be paying attention to press releases? What are your thoughts there? And Jeff, I'll go to you first.
Well, I'm tempted to say to buy my book Pay Dirt, but
Yeah, that's a good answer.
but honestly, I'm not trying to promote it or sell books, but I did put a lot into it to basically answer that question and give people a fighting chance. Someone who doesn't know a lot about the industry, give them a fighting chance to really understand that. And I guarantee you'll know more than 90% of retail investors out there by reading the book. But enough promotion. I think the main thing is you want to get as much education as you can. There's a book out there called Mining Explained. I think it's in its 19th edition, written by Northern Miner. It's a great introductory text to kind of learn about mining and how it happens and that sort of thing. So that's a book I would recommend. But you probably do want to sign up with a newsletter. Brent's got a great one, and just learn as much as you can. And absolutely, you sign up for press releases. Any company you own, you automatically sign up for press releases if you already haven't. Even if it's a company you're watching, you want to sign up for press releases. And if you don't understand everything, you probably won't. That's okay. But try to get a feel for what's happening with this company, and don't hesitate to pick up the phone and call the CEO or investor relations department if there's something you don't understand, especially with the juniors. They should be readily accessible to you.
And Brent, your thoughts, how can a new investor approach educating themselves on the sector?
Well, certainly getting a hold of some good books. You can Google, that stuff. Certainly the ones Jeff mentioned. There's one by, I think his name is Robertson. Great book. On the Sprott website, there's a great series of videos that Andy Jackson did on different deposit types. Go to these meetings. Go to the VRIC. Go to Brian London's Northern Investment Conference. You learn so much more at those conferences, just talking to people, either the company management or people you're hanging around with at the bar, listen to the speeches. If you can't get there in person, go on the internet and catch those videos. Joe Mazumder's newsletter, Exploration Insights, which he and I work together on, I think is a great one in terms of getting a lot of technical details. And this is a tough goddamn sector because there's so much involved. So I really think if you've got a broker or a brother or a newsletter writer, someone that you can trust that knows the industry and can tell you, yeah, don't do that, for God's sake, don't do that, whatever. That's a real help as well.
Great advice there. And now let's move on to discussing specific stocks in the gold and silver space. What companies are you both currently either invested in or watching, and why? And Brent, we'll go to you first for this one.
Okay. First, bear in mind, this is October 17th, right? I don't know when anyone's going to see this, but the first two stocks I'm going to mention are drill dependent. These are pure grassroots exploration plays by really competent people looking for something that, if they're successful, has a meaningful impact on the share price. First one, Headwater Gold, HWG, on the Venture Exchange. They've got a market cap of 19 million, about 3.5 million in the bank. They've got a joint venture with Newcrest, now Newmont, where they're committed to spending 10 million bucks on 4 projects. That's a commitment. Thereafter, they can earn up to 75% of each project by bringing it to a pre-feasibility level study. And they're looking for high-grade epithermal gold silver deposits, which are minimal to underground mining in Nevada, Idaho, and Oregon. And they've made a couple of what I consider discoveries. The primary one is Spring Peak in Nevada. I've been there twice. Joe Mazumder's been there once. And they're drilling some very interesting holes in a place that's never been drilled. So I think that's one I recommend keep an eye on, or if you want to gamble, go for it, but be sure and watch for results. Second one, another tiny company, Radius Gold, market cap about the same, 18 million, maybe 3 million in the bank in terms of other equities and cash. They've got 3 joint ventures, 2 in Mexico, 1 in Guatemala, high-grade gold deposits. The one to watch there is a project called Tropico, which is their 100% owned project. It's in the Fresnillo district in Mexico, which is the biggest silver district in the world. They've made a blind discovery of the right style of veining and alteration. We haven't got assays yet back on deeper drilling. They're running into some drilling issues. But from what I've seen, they're in the right place, right environment, seeing the right toleration. Keep an eye on that. Last, I'll go with a big company, Vizsla, VZLA, silver mostly, and some gold. Mexico again, high grade veins, market cap about 100 and 300 something million, 40 million in the bank. They've got a district they're developing or drilling out, high grade underground silver deposits. I think that's going to be a great, eventually a great district as well. So those are the three that I would have you look at.
Great. And Jeff, what about you?
So there's lots of companies that are going to be at VRIC that are in our portfolio, and my portfolio on the website is companies that I'm personally overweight. Cassier Gold, P2 Gold, Thesis. But one I would highlight right now is a brand new pick, and it's still deeply undervalued, is Tectonic. You can look that up, the symbol up, I don't know it off by heart. But this is an asset up in Alaska. They're drilling it now. Quentin Henning of Crescott Capital asked, is this the next Snowline Gold? That's a big statement. And I don't know that that's really bear out, because Snowline is going to probably have, double-digit million ounce gold deposits. But there's a lot of potential here. You can read a lot about the background on our site, my interpretation of that. But the bottom line is this is a highly prospective area. In fact, Crescott Capital doubled their position just recently, and the stock is still selling for pennies, basically. They're drilling right now, so results are going to be out here on, I think this is October 18th, Brent. So maybe your age is coming through there, Brent. I don't know. It's the correct date. So
In Utah, we're always at least a year behind here.
I love to give Brent a hard time when I can, but check that out. That's a brand new pick for us. I just went overweight, so I've been buying that stock. And then Snowline Gold, I have to mention them. We're up tremendously on the stock, more than a 10 bagger at this point. But I mention it because of what I said. This is realistically probably going to be a double-digit million ounce, meaning 10 million ounces or more. A lot of analysts have said there's already, I've seen from 6 to 9 million ounces, and that's just on the Valley deposit. So there's a lot of growth coming there. It's going to get better. The knock on Snowline Gold has always been, what was greenfields, but they've made a discovery now. But since it's greenfields, there's no infrastructure there, and there's not. I was on one of the very first planes that flew in there last summer with Joe, I believe, and so there's not a lot of infrastructure. That'll be a big capital spend to build that out. But this is probably going to be a mine. It's probably going to get bought out. So I think there's probably realistically another double in there before it gets bought out. Now that's just a guess on my part, but based on where it's at right now, I could easily see this being at least a billion ounce deposit, if not more. And you can look up the market cap from me saying that. But I do think that's probably actually a lower risk play than some of these explorers, even though they've already found something. So those are the two I would highlight right now.
Great. Well, thank you both for joining us today. It's been an extremely enlightening conversation. Before I do let you go, Jeff, tell us about thegoldadvisor.com and your book, Pay Dirt.
Yeah, everything I do now publicly is on thegoldadvisor.com. It is a sponsorship site, so you need to be aware of that. It's different than a subscription site, which I've done many times and I love, but at this point in my life, I just want to do the sponsorship thing. So for a company to get invited on the site, they must pass all of the criteria I outline in Pay Dirt, and they must also be a stock that I personally would go overweight. So you can see the portfolio for free by just creating some login credentials. And the book paid her. It took 2.5 years to write. And it's not just me, it's a system I've used and I've been successful with in the past. But there's also 16 other experts that are in the book that I interviewed for the book. So it's just full of other quotes and input and advice from 16 other people that work in the industry, from geologists all the way up to capital raise experts. So there's a lot of how-to information in the book, and like I said, it's very direct, and it tells you exactly what to do. And I think if you follow it, you will know more than most retail investors. It's available in ebook form now. You'll see it on the website, and the physical book is coming out soon. I don't have an ETA yet, but hopefully it'll be there by VRIC.
Great. Well, I'll put a link to the goldadvisor.com in the description below. Brent, could you tell us about Exploration Insights and anywhere else you'd like to direct people online?
Yeah, well, I started Exploration Insights back in 2008. And Joe Mazumdar came in about 2016 or so, and it's now his newsletter, but it's taken the same model as I had, which is basically it's subscription based. We don't take money from anyone else. And it's about what we're buying or he's buying with his own money. And then he follows it. It comes out weekly. And I think, Joe's got, you can look on the website, explorationinsights.com. He's got an incredible background in capital markets, geology, exploration. He's down in Chile right now, just on his way to Peru, out in the jungles. He spends, I don't know, half his time on the road looking at these projects, which in my view is key. So yeah, go there, check it out, explorationinsights.com.
Great. I'll put a link to that as well in the description. Gentlemen, it's been an honor having you on and look forward to doing it again.
Great. Thanks for having me, Jesse. This was great, and I'll see you at VRIC.
Yep. Thanks, Jesse.